Thanks to our friends at The Motley Fool, we get to make these videos because of our partnership. If you're looking for some great stock ideas, go to our link, fool.com/the smattering, and The Fool is going to give you their 10 best stocks to buy right now. Most everybody that's watching this should know Activision Blizzard has agreed to be acquired by Microsoft. So as much as anything, we're going to talk about the revenue and the numbers. As much as anything, investors are going to want to know what management is saying about that acquisition.
Yeah, and they're not doing a conference call, so this will just be the press release. But I do think that the reason that this is interesting is partly from Microsoft's side, because they have agreed to acquire this company that seems to be pushing forward. So, but it's $95 a share is the number that they agreed to acquire Activision Blizzard at. I believe the stock is trading at close to 70 right now. So there's a big disconnect between what the market thinks the likelihood of this closing is and what the actual closing price would be. Now, when the deal was first announced, it was like summer 2023 they expected the deal to close. I don't know if we're kind of still on that timeline, but the reason to think about this if you're an Activision Blizzard investor is if the deal does not close, you are left with the business. So, right, what does the business look like? Here is the Q2 2022, so last quarter numbers compared to Q2 2021. You can see that during kind of the depths of the pandemic, things were pretty good. Margins are great. Net income's great. Last quarter, not so great. There was a bunch of different things that happened there, some delays with some of their games. So this is the context that I want to bring to this specific earnings report, because I think the thing that's really hard is if you're just thinking that it's an arbitrage game, then there's a ton of upside. But what if the deal doesn't close? Does this stock go to 20? It's worth thinking about.
Yeah, I'm going to share. This is where we are. So the deal was announced early this year, right? The price skyrocketed, right? Skyrocketed into the 80s. But you can see it never, even from the beginning, it never fully expected that the deal was going to get done. I think the reality is that there is significant concern that this is going to affect consumers in a negative way, right? Microsoft's game is obvious. They've already started a service, right? They have a monthly subscription for video games. They want Activision's content to be part of that. But the question, what it gets back to is going to be exclusivity.
The other thing that I have to question is, what is the future of a studio like this? And I think this was always one of the challenges with Microsoft's strategy. The part of the appeal of a subscription is now we're going to pull in a whole bunch of titles. We don't need to be reliant on one big tentpole, or in the case of Activision Blizzard, there's three. Now we can ride the waves depending on where the popularity of games go. But yet you're buying a studio that's reliant on those tent poles and has a very different business model. And I wonder, coming out of the pandemic too, does consumer behavior change? We've seen that with something like Roblox, right? Like, yeah, turns out when kids go back to school, they're not playing Roblox as much. Let me ask you a question, Jason, because this is kind of the crux of it in my mind. If you are an investor in Activision Blizzard, do you look at these numbers and do you want to own this business if the Microsoft deal falls through?
No, I don't. I certainly would not want to own it. 70 is a lot more attractive than it was, even a few months ago. Absolutely. But the biggest issue with me, Travis, is that the entire gaming industry has become very mature. It's a very mature industry. It's lower growth. The reason we're seeing deals like this deal that Microsoft agreed to buy for is bigger companies are trying to consolidate it, and they're trying to make it part of some bigger offering they have to make an ecosystem, right? Apple's kind of shown a lot of companies the way to do that effectively, and Microsoft, to a certain extent, is trying to do the same thing with gaming. So I'm not interested in it because the growth profile I don't think it's very attractive, and it's hard to say what the trends are going to be. And I think by and large, these assets are going to continue to be devalued a little bit.
The other thing I'll add to that is I think you're absolutely right. The way that I think about this market, if you kind of think about developers on a continuum, There's small developers who are, making little indie games, putting them on smartphones, maybe even on Nintendo Switch. Then there's the big developers doing, Fortnite and Call of Duty. And what Microsoft is trying to do is consolidate a lot of that with their subscription bundle. Because remember, the subscription isn't just for Xbox. It's for anywhere you want to use the Microsoft Game Pass subscription. So That's what they're trying to do, is have as much content on there as they can. So they're trying to be the aggregator on that side.
Across all of the platforms.
Across all platforms. And then there's still going to be these indies. And I look at numbers like this, and if you're stuck in the middle, if you're Take-Two, if you're EA Gaming, Electronic Arts, what do you do? Do you just become the company that makes games and then sells them, puts them on Microsoft's subscription service, and then you sort of lose control of the customer relationship and with the ecosystem and the data and all that stuff? That's what worries me about Activision Blizzard. If you're a shareholder in this Microsoft deal doesn't go through, is that they then become a company that's in a really hard spot. So that basket of stocks, EA, Activision Blizzard, and Take-Two, I think they're really tough to invest in right now because I don't see value. You're seeing revenue go in the wrong direction.
Well, pricing power has eroded, right? And it's going to be tough to have the kind of margin profiles we've seen in the past. And when that funnel is being shifted away from retail customers willing to pay that sticker price, or even go to your website and pay that sticker price to buy the game, to that fixed monthly cost, and then that becomes the market, it resets the math.
So what do you think? Activision Blizzard, okay results, bad results, good results? Where's your head at?
If you were a shareholder in this business and you were waiting for that 95, it's hard to say, okay, you know what, just sell and take 71. Because I really do think that the odds are better than even that it gets done.
I agree. But I think the problem is if it doesn't get done, this stock goes to 20, 25.
I don't know. I don't know if it goes that far. Here's the best way to think about it. Because I have some other stocks that I've lost conviction in that I've sold that are down big. And I'm doing it now because there are other stocks that I have high conviction in that are also down big.
Yep.
So if you have some really good ideas right now and you're looking for capital to deploy, taking the $71 a share for Activision might be the best thing to do. It's really hard to predict a path forward for just great returns. It just really, that's kind of how I think about it.
All right. Well, there's our initial thoughts on Activision Blizzard. I see the business moving in the wrong direction. So this is one I'm staying out of. Let's move over to